This is CBT News, the voice of the retail automotive industry.
Good morning, everyone. Jim Fitzpatrick with CBT News. Thanks so much for joining us today. Today, we're happy to have with us Erin Kerrigan, Managing Director at Kerrigan Advisors. Erin, thank you so much for taking the time out of your schedule there to join us on CBT News.
Happy to join you. Thank you so much, Jim, for having me.
Sure. So for our viewers, kind of give us an update on what things look like in the M&A world in light of this COVID-19 pandemic that we're all dealing with every day. How has that affected things, and what's on the horizon?
You know, it's been an incredible year, obviously, for everyone. And what's been most really surprising to us is just how quickly the buy-sell market rebounded, much like how quickly car sales rebounded. In fact, as we are beginning to write our second quarter report, which will cover the full first half of 2020, we believe that we may be above 2019 levels when we finally finish tallying the buy-sell activity.
Wow.
Which, quite honestly, surprised us. And we are very happy to see that transactions that we were working on in the midst of the shutdown have all come back to life and are tracking to close. So I think that's not unique to Kerrigan Advisors. That is what many others are seeing in terms of getting transactions done. And it's wonderful news for those dealers that are looking to sell today, because I do think that the valuations are strong and the buy-sell activity is very much alive and well.
And what about the capital, on the side of the capital? Is that still on the sidelines, ready to jump in?
It's just not on the sidelines. It's jumping in. I mean, if you look at the Kerrigan Index, for instance, yesterday is almost at its all-time high. You have Lithia at peak value ever in terms of market cap. So peak market cap for Lithia, peak market cap for Sonic, Asbury is on its way. These companies are all seeing tremendous valuation increases in the capital markets. And of course, that gives everyone a real sense of strength when they're looking to do acquisitions, when valuations are on the rise. I think a lot of that has to do with the fact that our industry just once again has proven how resilient it is in the face of a crisis. Dealership earnings rebounded very quickly. And it's because our business model is just so, it's so nimble and it's incredible.
Yeah. Would you categorize it as a seller's market or a buyer's market right now?
It's always a great question.
And probably one that's often asked of you, right?
It is often asked of me. And I would say that we really, it depends a bit where you are, in which market you are regionally. I'd say for sure, if you're in the Southeast, Texas, Florida, if you're in Arizona, Nevada as well, so the Southwest as well, those markets are very much sellers markets. There is so much demand for the high growth markets of our country. So that's for sure a seller's market. In terms of the other parts of the country, maybe slightly a buyer's market, but I would say that the good news is there is so much capital that continues to enter into our industry because it is seen as such a really recession resilient investment. And as we proved out during the 08-09 great financial crisis, and yet again here with a global pandemic, auto retail, again, because its business model is so dynamic and we can shift so quickly to higher margin business segments. We have such a high variable cost structure, so we can reduce expenses quickly. All of those elements just have really attracted some of the smartest investors in the country. And I don't see that trend stopping anytime soon, Jim.
Sure. Sure. What would you say if it, and I don't know if this is broken down by category or class of car per se, luxury versus, you know, kind of the mass appeal vehicles out there, but what are the top selling brands out there? Is there a list that you guys keep that says, man, if somebody wants to sell a Benz dealership or they want to sell a Lexus store or a Toyota store, you know, we've got just a list of buyers that'll pay, you know, top dollar for those brands. Is there such a list? And if so, what are the top selling brands?
It's an excellent question. There are definitely brands that are on almost every buyer's list of franchises they'd love to have. And we highlighted in our last Blue Sky report that we find those brands have the most pricing power. In other words, they are the ones that can really push valuations up because there's so much demand for them. And it's been a pretty consistent list. It's in the luxury category. It's Lexus, Mercedes, BMW are just the super strong ones. I'd say below that, you do have JLR is still in high demand. Their margins remain very high.
Really?
And of course, Porsche. Yeah, JLR is still it's an Energizer bunny. People love that brand because they just those stores can make tremendous amount of money and have consistently done so. Porsche also is of course, everyone, I think I've rarely met a car dealer that doesn't have Porsche on their list. So I would say no matter what, Porsche is always in very high demand. Sure. In the non-luxury segment, Toyota and Honda are on again, most buyers lists, and Subaru is very strong as well. Subaru has been
those incredible. They've been knocking the cover off the ball every month, just month after month. It's incredible.
Literally through the great financial crisis, they never missed a beat, and they're just hitting a segment of society in terms of as a brand. It seems like that consumer that loves them is growing and growing and growing. And so that is definitely a very strong brand.
That's right. And besides, who doesn't like puppies, right? So you gotta.
Right. Exactly. And you know,
you're gonna love a Subaru.
And their theme is love, and you know that's another thing. So.
Let's talk a little bit about this Asbury deal that we heard back on again, and it's closing or closed already with Park Place. That was a big announcement, you know, last year, $1 billion, and everybody was just freaking out about the $1 billion sale in retail automotive, and it caught a lot of dealers' attention, for obvious reasons. And talk to us about that. And it was shut off, of course, through COVID. And now it's back on at a reduced number. What impact has that deal had?
Well, I think that transaction, which hasn't yet closed, is very indicative of what I was saying earlier on how strong the buy-sell market has come back. So that transaction really didn't go through mostly as originally designed because of the market and the unforeseen abrupt halt to everything in our economy. Yeah. That transaction came back together very quickly, and really from a valuation standpoint really is not dramatically different, because remember this is sort of an apples and oranges comparison. That the first deal included all the real estate, over $200 million of real estate. The second deal didn't. It also didn't include several franchises. So really from a valuation standpoint, we believe that it really retained its value, and that's actually something that we're seeing. We're not seeing a COVID discount with any of our clients, and I think that's very good for sellers for sure, because what we're finding is most buyers are not even looking at 2020, because what are they? How do you even capture what's the performance of 2020?
That makes sense. Sure. Total sense, without a doubt. Well, Erin Kerrigan, Managing Director of Kerrigan Advisors, I want to thank you so much for this update. It is always great catching up with you. And certainly there's a lot of dealers out there that are going to watch this and go, hey, thumbs up, all things are good in valuations. And I know you guys are leading the cause in that, and charge, I should say, in helping dealers to put together these deals. So thank you very much for all of your time today. Appreciate it.
Thank you so much, Jim. I really appreciate being interviewed.
Thanks.
CBT News, the voice of the retail automotive industry.